Welcome everybody to our July 14th and our Bay Area Housing Market Town Hall webinar. To start off with, let's talk about the state of the market. And then what we will be going over today is that we're going to talk about the Bay Area housing market, and then also want to look at where is the mortgage rate going. And also one of the biggest topic people have been talking about is that, are people coming back to California or not, or are they staying out? The job market, we're going to look at the job market. We're going to look at the office leasing activities. And then, of course, we have to look at the rental market as well, with the eviction moratorium update, the rent rates, and the occupancy. Now, let's start with our Bay Area housing market. Please do subscribe to our channel and like our video, as we have spent quite a bit of time to put together all the research and share with you exactly what's going on during this past 30 days. I thought to share with you since January of this year to look at the number of active listings. As you see that it may not look like it fluctuates a lot, but really if you look at from May to June, we had jumped up over 10% of the number of listings. So actually back in May, we have talked about that we're going to start seeing inventory to go up, and we definitely have seen it in June. And then we also noticed that more and more people are preparing their property during the summer to put it on the market. Now, this chart is looking at number of new listings to be added on the market versus sold price over list price ratio. As you see that even though our inventory had gone up quite a lot since December, but it's almost kind of similar to last year. But then the way people are making offer, they're a lot more aggressive. We went from just barely over 2% over asking price to now over 10% over asking price. So that's why, as I mentioned, that last one, we were just really overwhelmed. We have done record number of deals just in the past 6-7 months. So just to show you guys how much activities are out there on the market. Now let's go back to look at Santa Clara County housing stats. If we compare May and June numbers, so let's look at this chart, because this is the one that really reflecting, comparing last month, we had gone up 14.9% in terms of number of closed sales, but comparing 1 year ago, it was 54.3%. But bear in mind that at the time, we just reopened the real estate market because we shut down for a few weeks. But then the median sales price has gone up to 1.735, and it has gone up 25.6% compared to last year. And while average days on the market has gone down from 24 days last year to 12 days, but stayed pretty consistent from last month as well. But condo and townhome, we have also a lot more sales. It's 28% more from last month and 137.5% more from 1 year ago. And their median sales price now is at $916,000, went up 1.8% from a month ago, while it has gone up 14.4% from a year ago. Average days on the market is not bad at all. It's still only 19 days on the market. It has come down 10 days from 1 year ago. As for San Mateo County, you will see that the single family residential side, for the sales price, it has gone up $2.09 million, which is up by about 0.9%. And it's only 14 days on the market compared to 18 days last month. And but then the number of listing is 550 sold closed sales this month, compared to last month was 453 closed sales. So it has gone up 21.4%. And in terms of the condominiums and townhomes, their median sales price at $958,000, it actually went down about 8.76%. And then the average days on the market has gone down a little bit, 19 days versus 22 days. And the number of sold is 187 versus last month was only 133. So it went up 40.6%. And let's look at the East Bay now. As you see, East Bay here, the pricing last year, it was at the median sales price 892,000, and it has gone up and now is at $1.2 million. It had gone up quite a bit since last year, but the steepest part is actually around February to March, and then it did slow down a little bit in terms of the appreciation, but definitely is still going up very strong in the East Bay. The average days in the market, as you see, last year in January, it was 45 days on the market, and then now down to 13 days on the market. COVID pandemic had really shifted a lot of people moving from the peninsula area to the East Bay, and we definitely have seen that a drastic change. All right, so here I'm just gonna show you guys real quick all these 880 corridor, Tri-Valley, and you see all these double digits increase compared to last year. And I mean, this is not talking about like in the teens, I'm talking about 40%. 34%, and these are huge numbers on the East Bay. So I'm sure a lot of our East Bay sellers are very happy because definitely the price had gone up so much since last year. And what happened to our open houses? So in the last month, our open houses have reopened. So you start seeing more open house signs on the street. And you know, one interesting thought is that I've been saying, you know, open houses, do they really actually sell houses? You know, for about 15 months, we did not have any open houses, but the market still remained very strong. However, of course, there are a lot of buyers still would love to go to open houses so they can just go at their own convenience. And really, we see about average 40 to 60 parties during the first weekend of open house for a listing. So it's still a lot of people coming in to look at properties. And so it is really fun now that we're back doing open houses. It's so fun to meet buyers face to face, talk to them face to face. But of course, we still have to be careful. We still have to wear a mask when we're indoor, and also control the flow as much as possible. But I think a lot of people are very excited that open houses are back. Now, we also want to share with you a little bit, just we kind of cherry picked a few offers, these real life offers that we have made or know of. We didn't win all of them, but we want to show you what we know. So as an example, in the peninsula, Burlingame, single family property, asking price like right under $2.9 million, got a preemptive offer accepted, sold $300,000 over. Hillsboro, $8.5 million cash offer, but went below $500,000 below. So a little bit higher end property, they do have a little bit more room to negotiate. It's not as hot and go as crazy as the mid-range. I guess the mid-range here is about $2-3 million properties. And San Carlos, 3.4 received 5 offers, $550,000 over. Mountain View, as you see, these cash offers, and they're like $1 million over, and another one's $400,000 over. Santa Clara, West San Jose, these they also have multiple offers, still $300,000 to $500,000 over asking price. And then if we look at East Bay, Newark, Fremont, same thing, still getting cash offers, still getting multiple offers. And then in terms of apartment buildings, they are also getting multiple offers, although they are not all over asking price. Some of them are pretty conservative below. And we do see that buyers, even though there are multiple buyers are not as aggressive, and they are kind of like just right around asking price. We do see like a few still try to get in below, and then the few would go above. And so in terms of the apartment housing market is still going really strong, even though a lot of people are really worried about these eviction moratorium. All right, so what about the loan situation? Let's take a look at the mortgage loan situation. Last time when you were on here in May, we looked at the April mortgage rates projections, and I mentioned that from all these different organizations, Freddie Mac, Fannie Mae, Mortgage Bankers Association, National Association of Realtors, they had all adjusted their projections. As you can see here, they adjusted about 20 basis point around there on their projections of the rate. And let's take a look at what happened now. Fannie Mae and Mortgage Bankers Association, they actually dropped their projections. They think the rates are actually going to come down more. It's not going to be as high. I'm just going to go back real quick just so you guys can see it. You see 2021, they thought it's 3.3, 3.6. Now it's like 3 to 3.2 for the 3Q. 4Q is about we average out is 3.37%. And then 1Q is 3.46, 2Q is 3.57, even though it is going up. But that projection is definitely a lot more mild compared to what we thought it was going to be. And Freddie Mac and National Association of Realtors, their projections are remaining the same. So I thought this is really interesting because for a few months now, we kept saying like their projections have been going up, but this month actually has gone down. So it's good news, but what will these projection or these rates gonna affect our housing market? I think that's something that we need to think about too. Now, the topic that I mentioned a lot of people are asking is that whether people are coming back to California or not. So let's look at the top metros for tech job postings. So as you see here, the top 10 regions had the most job postings in May 2021 are Washington, D.C., New York, Dallas, Los Angeles, Atlanta, San Francisco, Chicago, Boston, San Jose, and Seattle. So you see that 3 out of those 10, they are all in California. And now within the Silicon Valley, Apple is actually the biggest, or they posted the most job postings in the Silicon Valley area. So what does that mean? We also want to take a look at is that whether these companies are actually investing in California. And Silicon Valley Business Journal actually had an article to talk about that the Bay Area is on pace to set a record for venture funding. As a matter of fact, we have a few clients who are in the venture funding industry, and they told us the same thing. They are staying in. They also talk about, like, yeah, a lot of people have been talking about California exodus. A lot of companies are moving out, but really it's such a small number of companies. As you see here, it says that some in Texas and Florida have made a lot of noise about Bay Area tech companies and startups moving to their states. But San Francisco and those same 3 Silicon Valley cities each attracted more funding in the first half of this year than all of Texas, which has garnered about $4.2 billion. All of those Bay Area cities, plus San Jose and San Mateo, each took in more than Florida's $1.5 billion in the first half. So it shows that there's still a lot of investments in California. And also, I thought it was also very interesting is like LinkedIn, they got out of this rental market. They actually went ahead and purchased the site of its global Sunnyvale headquarters for $323 million. So they are also investing here in locally in Sunnyvale. And what about Google? Google also, of course, they already got the green light. We know that back in May. So San Jose City Council has approved that big plan. And what does it mean? It actually is like a multi-billion-dollar mega campus. And then on top of that, we mentioned that just now, LinkedIn also has purchased properties here, right, for their company. So do you think that they're gonna keep their employees now in the office or letting them work remotely permanently? If you look at the article for Apple, Tim Cook had announced that in early September, employees would be required to work in the office at least 3 days a week. With this schedule, even though it's hybrid, most people will have to move back to California, or unless they, maybe they will not be able to work for Apple anymore if that's their requirement. And also Google had said the same thing, is that they actually have seen nearly 60% of Googlers choosing to come back to the office. And then we also look at this report, which surveyed more than 120 tech companies in March. And they said that more than half said that they expect to be back in the office by the 3rd quarter of this calendar year, which is very much in line with what Google and Apple are saying, that they are telling their employees to be back into the office in September. So Silicon Valley's largest employers, sitting on millions of square feet of land that they own, have been particularly aggressive in dictating when workers get back. With that said, so let's look at office market. Since people are coming back, do we see more people are leasing their office market? Because as we know, office market was very, very quiet. And the first, even until, I would say until April, it was still really quiet. And all of a sudden, around mid-April, we do see a lot of companies coming back out and then starting to prepare and start looking for office building to buy or to lease. So here again, it says that for the second straight quarter, Silicon Valley saw more office space leased than put back on the market, fueled by some of its technology giants expanding or relocating their footprints in the region, according to new data from Colliers. And Marcus and Millichap also have their report for 2Q 2021 and talked about pretty much the same thing, that groundwork for brighter office outlook emerges. So we definitely see that office market is coming back alive. So with that said, now companies are opening back up, they're investing here, they're leasing more, they're buying more, and they're requiring employees to come back. What will happen to the rental housing market? Now, of course, the biggest topic for the rental housing market has been the eviction moratorium. And it was supposed to expire back in June 30th. And then they have extended again and again and again, and now extended up till September. But with this new bill, Assembly Bill 832 that Newsom has signed, extending this eviction moratorium until September, but the bill also utilizes $5 billion in federal assistance the state received to pay landlords 100% of back rent and future rent owed by eligible tenants unable to pay rent due to hardship caused by the COVID-19 pandemic. And it also covers utilities. Right now it's only 80%, but I know 100% is definitely huge help. And that's something that really, I think, in a way, is still not the best scenario for a lot of landlords, but still, I think if they are able to cover 100% of the back rent and future rent, and that will be such a relief for these small landlords who have been just really paying out of their own pocket for all these expenses. So I'm very excited to hear that, and hopefully, we are going to go back to a normal market soon with knowing the job market has improved so much. And in terms of the rent growth in the 2Q 2021, we have already started seeing that the increase, as you saw from Q1 2020, it was, Q2 2020 has gone down quite a bit. And then now 2021 2Q has gone up for San Francisco, Oakland, and even San Jose area. Now, what apartment segment is most in demand? And if you look at the vacancy, this report actually was produced in 1Q. So it was kind of like more of a projections, and it's looking at that 2021, we should see the vacancy rate at about 4.5%. But then here, as you see that Class C is a little bit, is lowest, the vacancy rate at 4%, and then Class B is at 4.4%, and Class A is at 5.5%. And the rents in these three big cities, three big Bay Area cities, are all up for the first time in the pandemic. We've been talking about how the rent has come down, but remember, if the rent comes down 25%, it will take a lot more than 25% to come back up to the previous level, of course, but at least it's good news. San Francisco median one bedroom rose 1.9% month over month to $2,650, while Oakland went up 1.5% to $1,980, and San Jose saw the biggest jump of 6.3% to $2,180, which was the largest month over month rental increase in the country, according to the report's author, Jeff Enders. And in terms of the rent payment tracker, we are still around 95, 96%. We are not as high as back in 2019, and we are slightly slightly worse than 2020, as a matter of fact. But that's also because back in June is kind of like the start of the pandemic, and then people might still have some savings. But then at this point, there's definitely, we do see that there is some lingering effect that some of the renters just cannot pay. And also, if you see that this brown side is talking about like how much people pay by the 6th of the month. So this, we actually have a lower number compared to most of the months previously. And I thought this would be a fun chart for those investors who are looking throughout the whole country, wanting to see the cap rates through the country. Is you see that, you know, the green ones, the dark green ones, is the one that you can still find cap rate over 7%, while the lighter green is 6 to 7%, yellow is 5 to 6%. Although I actually do see a lot of in Texas is really, I don't think I see anything 6%, unless it's Class C, in the Class C area, possibly. And the Bay Area, of course, we're still seeing 3% for apartment buildings. All right, so here's my conclusion. The forecast for housing, well, this is not my prediction, but this is by Pulsenomics, and their prediction is that 2021, the appreciation is about 8.66%. This is national average. And then 2022 will start to return, be more mild, 5.12. And then 2023 to 2025 will be in the 3% or so. I want to touch on a little bit about the lumber. We talked about last time that lumber price has gone up 300%, which is pretty significant. And but interestingly, if we look at what happened, and actually just this month or this last week, the lumber prices had dropped significantly, and it went, as you see, it went up 350% and then back down. So it actually have gone down quite a bit. However, does it mean that the pricing of the housing price is going to come down? They actually don't expect the new houses going to cost less, but the builders definitely going to start, you know, stocking a lot more lumbers now and start to build more. We do our webinar and also housing market update every second Wednesday of the month, and we do live webinar from 4 to 5 p.m. Pacific Standard Time. So I hope you can join us. All right. And then here is really my conclusion chart, is that now we looked at housing supply. We're going to see that it's going to start increasing, but moderately. Interest rate is going to remain low, actually even decreasing, meaning like the projection has decreased. So it will still remain pretty low. The demand is still really strong. As we mentioned, summer travel, but we still had a lot of people coming to open houses. It's probably going to have a full return after the summer break. And the California market, job market is coming back, and we have increase in corporate investments. So our economy is doing great. Commercial real estate market, we see office occupancy had gone, and the leasing activities had gone up. So it's showing that more and more people will need to come back to California. And with the eviction moratorium expiring, rental rates increase, you'll see that we're going to have even more investors' activities on the market. And because we're going to have more real estate investors, of course, we need to know how we can save taxes. And this is the reason why we had invited two very special guests today.